Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency again. So yesterday we talked that situation currently stands not really simple, because here we could find the reasons as to keep long positions, as to take the short position, and that was a bit risky and brings some uncertainty when you're taking the position in some consolidation in a pattern that has dual nature, which could lead to breakout in both directions. So when we have some directional pattern, why we call it directional? Because it shows the direction. It is aimed on some clear direction. For example, is the butterfly pattern, or triple two buy and sell. We even call it as buy and sell patterns. But when we have the triangle or pennant pattern, yes, theoretically, as a rule, it becomes the continuation pattern, but it's not really rare when you could see the opposite breakout. And yesterday we talked a lot about the advantages and the disadvantages of the different positions, and in general our words were confirmed by the price action. Yesterday it was really choppy price action, but overall trading range was really small, and it makes no significant impact on the final picture on the market, which mostly stands the same by today's morning. But anyway, the overall choppiness was standing here due to the information on the, again, two driving factors. So both of them were also mentioned and discussed in the weekly report. One of them, the United States-China negotiations. Second is release of the Fed minutes. So Fed minutes have really limited impact of the market, but what's about the China and United States, so we warned a lot about this, and when we saw this drop, it was mostly supported by some progress in relationship in the negotiation, and it was really very close to the signing of the phase 1 agreement. So that was encouraging investors, and a lot of talks and speech in the news, mass media, on the Bloomberg TV. It was about this, and we said, guys, it's long-lasting soap opera. So we saw previously that's one decision comes to another, and it's just like the shaking boat. So I think that investors really have some immunity to this, and following reaction on the news becomes weaker and weaker compared to the first reaction that were standing on the market when just these negotiations had started. And yesterday, so if you take a look at the hourly chart, you could see that this drop actually has happened based on the, as you know, was discussion in the Congress in the United States and some measures on independence on the Hong Kong, and that was not really, the China was not happy with this decision, and they said that the United States should not intrude in the international inner affairs and stay aside of that. So that was treated as the bad sign for the further tariff negotiations, and as you can see, this drop has happened. After that, some Fed minutes has bring some volatility, and in fact, market has returned back down, back up in the same range. What I would like to say is that all these driving factors that we said is mostly artificially increased in value in the mass media. So in fact, they have a really limited impact in the market. And in general, investors already are tired from these long-lasting talks on these tariffs and the negotiations, agreements, and so that really, it's really boring. And in fact, it makes impact on the market just because it is widely announced in the mass media. So in fact, beyond this speech and talks, really I did not see some real progress, and that both sides would like to reach something. So, and that explains that reaction every time becomes smaller and smaller on this news, and actually you can see that yes, the market was standing just on the side. trading range. So today, guys, we will get today and tomorrow we will get a lot of PMI data across the world. So we will get PMI in Europe, we will get the PMI in Great Britain and in United States, and that probably will be important. Also, we will get a speech on Christine Lagarde today probably. That it will be actually two major news that we will get till the end of the week. And I suppose that if it really will be bad news or worse than expected, investors are really tired from this United States-China saga, and it really could be the final drop, and market could show finally this acceleration for this area. Well, because currently the fact that how market behaves right now, it is not the way how market usually turns down, guys. So take a look on the 4-hour time frame chart. We talked about the triangle yesterday. It was broken down, but market was able to hold above our vital area. So now the triangle has changed the shape a bit. So we have not the symmetrical, but descending triangle. So it's mostly flat triangle. It's classical shape. And here you can see the market stops and hasn't reached even confidence support. So that was our vital area, and we said market should stand above it. If you'd like to take the long position, you have long tight stop below the confidence. But you can see confidence survived, and actually this choppy action fast return right back up. So that is really not typical way how market usually turns down, guys, especially from the strong resistance. Usually reversal happens fast, and challenges down and down acceleration, something of that sort. This coiling right below major resistance and taking the shape of the triangle increases the chance of the upper breakout. And as long as market will stand at this triangle right around this resistance, the greater chances on the upper breakout. So that's why, in general, so although we've got this choppy action yesterday, overall view stands the same. So those of you who take long, have long positions or taking long yesterday, you could keep them, just move stops below the confidence. So market should stay above the confidence to keep chance on upper breakout and keep bullish scenario valid. So for the bears, in general, its setup is also the same, because we said place stop above this top. And while market stands in triangle, it also keeps chances, at least theoretical, on the further breakout, because we do not know what the PMI index will be. Maybe some other news will be released. So triangle is some kind of the area of the uncertainty, because it keeps chances on both directions. We could specify only the levels where these scenarios will be destroyed. So for the bearish scenario, this is breakout above this top, and upward continuation for the bulls. This breakout for the confidence and starting downward action. So in our view, mostly also stands the same. So as we said yesterday, you could take the position inside the triangle. It has some advantages, but when you're taking the position inside the triangle, you are meeting it partially some kind of the gambling, because you're depending on the breakout. Conservative approach suggests waiting for the breakout and then taking the position in a direction of the breakout, some minor retracement. So that's actually stands the same. That's our position on EUR. Let's see what we'll get today, and especially tomorrow, on the massive PMI release on the Europe, in the Europe and in the United States.